What does APR mean? If you are anything like me, you find the term APR confusing. That's because it is. It also means different things in different countries. I'm going to explain the UK version as opposed to the USA one, but I will touch on that too. There are other sites that also explore this term. I found the Wikipedia explanation is for Americans and far too technical for my simple brain. Lots of maths. The best explanation I've come across on this subject for the UK is Sasha Yanshin's MoneyFox channel. The link is below. Basically, APR means annual percentage rate, being the rate of interest that you pay over a 1-year period. If you borrow £100 at an APR of 10%, you will have to pay back £110 at the end of the year. There is also the phrase equivalent APR. This is a way of comparing APR in a way that also includes fees. Taking the previous example, if you pay a fee of £20 and interest of 10%, then at the end of the year you will have to pay £130. This makes the equivalent APR 30%. When comparing equivalent APRs, try to work out what the interest rate is and what the other costs are. It could be that the fee is worth paying because it comes with lots of useful benefits, such as travel insurance. Sometimes you can find that a higher equivalent APR has a lower interest rate. It's just the fee that distorts it. I told you this was confusing. There is then the phrase representative APR. A lender might advertise a representative or typical APR of say 10%. This means that at least 51% of their customers pay interest at an APR of 10%. It does not mean that you will be part of that 51%. You might have a poor credit record or require an unsecured loan so that the APR you end up being charged with is, say, 25%, your personal APR. There's an elephant trap, if ever there was one. Your credit score can be affected just by applying for a loan, whether you take it up or not. There can also be other charges and fees that are incurred for things like late repayments, going over your loan facility, or even paying your loan off earlier. Make yourself aware of what these will be. There are also a number of key areas to look out for when considering APRs. The main one is compound interest. This means that the value of your principal loan will have the outstanding interest attached to it in the period concerned. Say, for example, you borrow £100 for a year and are charged 10%, which you do not pay back. The following year, you will be charged interest on £110, and so it goes on. Many lenders compound interest every month, and that's reflected in their APR. Some loan sharks do it too, which is why their API is so high if they do it daily. This is highly regulated in the UK, but you need to ask your lender to explain and illustrate to you how it works in a simple and understandable way. If they give you a lot of confusing technical financial jargon, then just walk away. I'm not saying that some lenders make it difficult for borrowers to understand the terms on which they are borrowing. That would be hard to imagine. The other thing to look out for is whether the rate charged is fixed or variable. Banks themselves generate the money which they lend to you based on the central banking rate. In the UK, this is called the Bank of England's base rate. If you were borrowing from a lender bank at 10% at a variable rate and the Bank of England base rate raised by 5%, then your lender would probably charge you 15%. The APR is a lot higher than you signed for. Maybe you bought a fixed rate deal but paid a higher equivalent APR to secure the rate at 10% for 2 years. What then is the American APR for our lovely American viewers? APR in the United States is expressed as the periodic, for instance monthly, interest rate times the number of compounding periods in a year, also known as nominal interest rate. Since the APR must include certain non-interest charges and fees, it requires more detailed calculation. It is similar to the idea of equivalent APR discussed above. I think it is a useful way of defining it. Well done, the USA. There are technical legal definitions for all these terms in the UK and the USA, but I've tried to keep it simple. Basically, there are 6 questions to ask when looking at the term APR. 1. What is the underlying rate of interest? 2. What other charges and fees are incurred, and do these come with a benefit? 3. What is the equivalent APR? 4. What is the representative APR, and am I likely to get it? 5. How often is my loan interest being compounded? 6. Is this loan fixed or variable? Finally, remember the lending bodies, such as banks, are not your friends, despite their fluffy, heartwarming adverts. They are businesses and rely on you borrowing money, so shop around and work hard to find out what they are really offering you and if it is right for you. This is not investment advice and no liabilities except if anything stated in this video. It is just giving you some tools when negotiating the term APR. Please subscribe for more insights into personal finance. Thank you for watching and please leave your comments below.